Hey guys, welcome to today's episode of Major Players, where I bring you a major player from their own industry. And today I got my man Lou here. We're going to be going over like everything that he does about business loans, taxes, cost segregation. He's a strategist, he's my guy, and I want to learn from him. And naturally, I think you guys should connect to major players in every industry, and you guys should definitely connect with Luigi. So thanks for being here with me today, Luigi. I appreciate that.
Victor, the honor is all mine. Thank you for having me.
Thanks, man. Thanks. So, real fast, if you don't mind, kind of bring everybody up to speed about the things that you're doing about financing, taxes, things like that, because I love everything you guys are doing.
Okay, great. As you know, my partner is Matthew Meehan, and we've got a couple of firms. One is Shield Advisory Group, and Shield Advisory Group is a high-level advisory consulting firm, and we help small business and entrepreneurs with acquisitions, with tax planning, strategies, franchising,
Mm,
um, uh, cost segregations. On the brokerage side, we run Credit Bank with a C, and that's just classic financing, whether it's lines of credit, factoring, SBA term loans, 7As, real estate backed SBA loans. So
mm.
it's part of a holistic service that we provide to small businesses and entrepreneurs.
Nice. So, and what's your background again?
My background, I'm a New York City boy, born and bred. First generation Italian immigrants, as the name gives away. And I grew up and went to school in the New York City area. I stayed there through college, law school, graduate school, and then
Mm,
I sharpened my teeth in the canyons of Wall Street. That's where I met Matt. Um,
really?
and then like as the name goes, we named our podcast the Liquid Launch Project because we would meet at bars during happy hour after the workday. And I remember
Okay.
there was a bar that we used to frequent all the time called Bobby Van's. And the bartender would always say, "This place is always busy. And good times, you guys come to celebrate, and bad times, you guys come to commiserate, right?" But more
Right.
deals happened over a cocktail or a
Mm,
beer or a Campari than did over Zoom. Like there was no Zoom back then. Everything happened on a handshake.
right. So, and man, that's interesting. Again, this is why I'm doing stuff like this because I learn as well, right? So, like, when you were growing up, like how was it? Like how was little Lou? Like, I know you said you grew up in New York, but it was like how was the family life? Like, were you around a lot?
Hey, look, I grew up in the age of come home, do your homework, go to the schoolyard, and when it starts getting dark, you're coming home for supper, right? So we had
Right.
very um, finite rules. You
Hmm.
went to school, you listened to mom and dad, you did your chores, you did your homework, you played, you went to bed, right?
Right.
It was much less of a technological era. Like our idea of like entertainment was, maybe you sat down with mom and dad on a Friday night and watched a sitcom, right? There was no
Yeah.
streaming or anything back then. You don't forget, I'm a child of the 70s and 80s. I'm born in 74.
Right. We're
So,
born around the
so
same time.
yeah. So technology was very different. Although I will say, I think there was one advantage.
Mm.
When you put 10, 15, 20 kids at a schoolyard or a playground,
Hmm.
something magical happens. There's this social hierarchy.
Right.
In New York City, there was always a basketball court, right? So you have 10 kids,
Right.
that becomes a 5-on-5, right? The
Yeah,
two
yeah.
tallest kids, the two tallest kids are the captain. Is like, oh, I'm going to take Vic. He's got ups. I'm not going to
Right.
take Lou. He's got a real bad crossover, right? So,
Yeah,
so that
yeah.
so that so you would formulate camaraderie and
Mm.
team play, and I think there's also social skills, right? We figured stuff out by ourselves. No one drove us to a playground. No one
Mm.
organized a play date. You kind of had to figure it out. And
Yeah.
sometimes figuring it out meant, you know, a wiffle ball and a wiffle bat. And sometimes the bases were a school bag, right? You
Yeah,
just kind of
yeah.
figure stuff out.
Right. Man, I grew up the same way,
Yeah.
I was born in 73, same thing. So it was like go outside and play, come back home a minute before it's dark, eat dinner with the family. So like it was
Yeah.
interesting. So you're right. Like we had to figure it out, which made it. a little bit because we were a lot more, well, I feel like I was creative, back then too because of it. You know,
Yeah.
and it's interesting you mentioned that. Like, did you come from money? Like I heard you,
No,
did your family
no,
have money or
no.
like how was that? How was it growing
And
up?
anything but,
Yeah.
you know, there's a contrast because my wife and I talk about it all the time, where because you want to be a loving parent and you
Hmm.
want to provide, but you also want to straddle that fine line between creating that drive
Hmm.
and not creating too soft of a childhood for someone. So, for example, Christmas for us as a kid was a big deal, right? You got a
Mm.
gift, maybe two, maybe three gifts. Like
Right.
you looked forward to those gifts, right? Because you got to be a good boy because you want to be on Santa's good
Sounds,
list, right?
yeah, yeah.
So it wasn't like, oh, you're gonna get a gift every week, or you need something like you saved up your wish list because like birthdays and Christmas only came around twice a year.
Right, right. Yeah, yeah, for sure. So what was the part in your childhood or like when you were growing up that you were like, okay, well you said because you went into college, you went to law school, you said, and plus like you
Yep.
kind of did this stint on Wall Street. Like at what point was
Yeah.
that through line of saying, okay, like you said, if you weren't raised around money or did they talk about it or did you see it or was there like what was the thing that was like the moment for you to tip over to be like, okay, I want to be successful?
I think it was very humble. I think I was 11 or 12 years old and I wanted a new pair of sneakers. And I went to my dad. I said, Dad, I need a new pair of sneakers for school.
Mm,
And he's like, you already got a pair of sneakers this year. That was it. And I was like, oh man, what am I going to do? So I kind of looked around. I was like, oh, can I wash some cars? Can I? And I went to the local newspaper guy that I knew he had a route and I started a route, woke up early in the morning. And then I realized that wasn't enough money because you only make pennies.
mm,
And this was the day of the big family weddings, big Greek weddings, big Italian
mm,
weddings. I grew up in a very ethnic neighborhood, big Jewish weddings. So I
right.
got a job at a catering hall, being a busboy and a waiter. So Friday, Saturday, and Sunday nights, I don't even have my working papers.
Mm,
It's just I got a waitering job, and then I realized, wow, I was making 25, 30 bucks a night. This is awesome. Bought my
right.
first pair of sneakers, and the rest is downhill. So it was the classic necessity was the mother of invention. And then I got the itch for working. I kind of liked working.
What
But I
was
will
your
tell you
first
one thing:
job?
the newspaper route, and
Mm,
my waitering job. Those
mm.
were my first jobs as a kid.
Wow.
But
Wow.
but my parents did a good job at instilling in us a work ethic. Like we always had chores, like take out the garbage and
Mm,
help dad wash the cars. My dad was a mechanic, and he'd always do like side gigs in the
yeah.
driveway or in the garage. I was always helping him out doing that kind of stuff.
Mm, got it. Got it. So like at what point like did you so you said you went to college. You went to college, you went to law school?
Yep.
Wow. Was that like a parent thing where you like I got to become like your parents wanted you to go to college, become an attorney? How'd that work?
I was the first college graduate in my family on both sides, maternal
Mm,
and paternal side. The only mandate we had as kids was you had to go to school. My parents had the foresight to understand the way out of the blue collar rut is through education. So
mm.
that was a mandate. I remember, like this is during the day of like the rotary dial, and
Yeah,
we'd call
yeah.
up grandma. We'd call up grandma in Italy every Sunday, and back then international phone calls were really expensive.
Right.
And he's like, you had like 10 seconds to say, "Hi, grandma, I love you," and like in those 10 seconds, all they would ask is, "How are you doing in school?"
Mm.
But I broke my leg. It's okay. My finger got amputated. Don't worry. How are you doing in school?
Yeah, that's how mine was too. Wow. You know what? Because and the reason why I say that is because okay. So the reason why I say that is because like I noticed like some of the people that have been like that's excelled. And this is something that we were talking about before this. I was like, there was always either an experience where they had like, hey, look, like you said, like, hey, I need shoes, and dude, that's it. I had that experience. Or exposure. They got exposed. Their parents talked to them about money all the time. One of my buddies was like, yeah, my dad used to read the Wall Street Journal to me all the time. And I'm like, really? I was just
Yeah,
talking to
that's
someone. I was
great.
like, dude, we got screwed when we were little because I didn't have that. So I didn't find out like that.
Yeah, I think the only time I saw the Wall Street Journal as a kid is when it was wrapped in fish or something at the fishmonger, right? No, I think my exposure, I think my exposure was from the stories I heard at the dinner table with my grandparents
Mm,
and my parents and my aunts and uncles and extended family, and you heard like the rough stories on, the life of an immigrant and how tough things were back on the farm. So you
right,
kind of realize, wow, maybe like working in an air conditioner isn't so bad after all, right? Maybe
right,
putting on a suit and tie, even though I have to work 12, 13 hours, I'm not really breaking a sweat. This is a joke, right? So like
right.
growing up with those um, tough stories kind
Hmm.
of creates a high bar because you understand what it means to work hard, right?
Right.
Like as hard as we work, man, we're still soft. Come on.
Yeah.
I'm in,
Yeah.
I'm
Realistically.
in, I'm in, I'm in, look at me. I'm in a comfortable environment. There's air
Yeah.
conditioning in the
I
summer.
know,
There's
right?
heat
It's
in the
like,
winter. Like,
yeah.
I'm wearing pressed clothes. Like, I'm not breaking a sweat.
Right.
There's tough work out there. Granted, you're dealing with clients and you have challenges, and every
Yeah.
deal is intellectually stimulating.
Yeah.
But
Yeah.
this is by no means hard work.
Right, right. And and I agree with you on that, man, because it's just like it's not like backbreaking. We're not out there shoveling dirt, climbing up and down some steel beam or anything like that. It's
Yeah.
like it's still work, to your point. And I was telling somebody about that, like having to mentally juggle financing, finances, real estate, what can go wrong, managing other people's capital, bank financing, the very hard line of yes or no answers or get this done. Very difficult for a lot of people, because if you're a good person and you have good ethics and a moral compass, some of the stuff we do is kind of hard because we have to say no a lot.
Yeah. Yeah. Yeah.
So that brings me to, so like you said you worked on, what would you do when you went to Wall Street?
So I was physically on Wall Street, right?
Okay.
But I was either after law school, I dipped my feet into the law world, and it
Uh,
just wasn't for me.
yeah.
So the law wasn't for me. So my focus of my career was more real estate related.
Okay. All right.
Um, we, we we had a real estate firm. We had a title company, so we were really deep in the weeds in real estate. And then years later, when I met Matt, is when we came up with the Shield Advisory Group and
Mhm.
Credit Bank because we just recognized, and I think that it was Matt's brainchild. He has to get credit for it. He recognized that there was a need for alternative lending vehicles
Right.
for small businesses. Like the small business, even or not, even today in 2026, is not properly serviced by the big banks.
Yeah.
Um, so there are a lot of creative solutions out there that small businesses need, and you just have
Yeah.
to find them.
Right, right. And that's and do you think like especially in your space too, right? Do you think like that's the biggest problem for any small businesses, like their lack of access to capital? Like
No,
like
no,
big institutional capital?
I think the biggest hurdle for an entrepreneur
Hmm.
is figuring it out. Like, what's your
Mm.
niche? Like, am I selling widgets? Am I selling legal pads? Am I selling pens? Like, what is my service? What problem am I solving?
Hmm. Hmm.
Capital is fuel on the fire. Okay. But
Right.
there's no fire to accelerate until you figure out what your product or service or what your workflow is. Right.
Hmm.
So
Hmm.
I am wholeheartedly against using capital for startups. I haven't
Right.
figured it out yet. You're just burning money. It's a high
Right.
risk
Right.
proposition, right?
Yeah. Yeah.
So once you've figured out what your product and what your sales cycle is, what your marketing flows are,
Mm.
what your who is your market.
Right.
Once you've figured that out, then what capital does is put fuel on the proverbial fire. So if you're doing X, the fuel allows you to do 10X,
Right.
right? But if you haven't figured out what X is, all the fuel is doing is going to wet X.
Yeah. Yeah. For sure. It's gonna drown it out, like you said, and you just blow
Yeah,
up in your face. So, and that's interesting too, right? So, like, because we met at the Consult for Equity conference that was here. It was like the
correct.
group that
Good
kind of
memory.
got, yeah, yeah. So that was good. And like, I moved here because I was like been doing real estate forever, apartment buildings, small deals, and I did my last few apartment buildings, and they did really good. Had the strategy. I moved here, and I was like, I'm gonna start a fund. Like so I can have a business that raises capital the whole time, so we can move into bigger deals, and it can be a long-standing business activity, not just me raising from a few friends, doing some deals and partnering with them. So it's interesting that you say that because as I moved over from like fund management and raising capital, my real estate, and you know this, like you said, you had a real estate company, my real estate hat comes in. So a lot of challenges that I found was like, am I selling real estate investments? Am I selling investments? Are we managing capital now? Because, the other side to me is like, I'm a deal guy. I'm a deal junkie. I love deals and deal structure. And I learned real estate from actually the finance side because my business partner's on the finance company, which is why like when we talked a while back, I was doing subject twos and restructuring, bad debt, negotiating with stuff like that, and then uh, dispositioning those deals, reselling them, right? But
Sure.
like, so I found that that was a challenge for me as well. It's like really to your point, getting clear, like the business structure, like what are you doing? Like, well, naturally we're in real estate, but well, now we're in money management. Like we're in the
Yeah.
side whereas we have to raise capital and manage that capital with asset management. So it's a weird play,
Victor,
right?
it's funny. It's funny. We're saying the same thing. And what's it come down to? No matter
Yeah.
how much the world changes, you got to get your elevator pitch
Down.
like down. You've got to get it
Hmm.
down pat. And
Right.
we call it the elevator pitch because you had what 30 seconds, maybe 40 seconds to go
Yeah.
from the lobby to the fifth floor to pitch someone, right? But if you
Right.
didn't know what you did and you cannot articulate
Hmm.
what your business does
Yeah.
in the course of an elevator ride, then
Hmm.
yeah, I think who was it? Einstein that said it best. If you can't explain something in a manner that a 6-year-old can understand it, then you really haven't mastered that subject matter.
Yeah. Yeah. I say it all the time. Like if you can't say it simply, you don't know.
Yeah.
Um, and it's easy to do that, and I found too, like depending on who I'm talking to or rooms that I'm in, it matters to your part. Like, so there's parts to that same conversation that matter to somebody differently. So if it's real estate, like, yeah, we're a real estate investor, we have a fund, or if it's a capital allocator, we're like, hey, you know what? We have a real estate fund and we're looking for capital to deploy. So to your part, but the stationary piece turns into language. If you're a doctor, you could say throat to a regular person, but they know the type of doctor you are based on the language you use. So like thorax or whatever it's called. So I find that to be true. So sometimes I always say like if you sit and listen long enough, you know what people are and who they are in business. And that's the nice part about it. So that's pretty cool. So it's interesting that you had that. So from you became who you are based on like I always like to look through that. It's the experience growing up, playing outside, experience with your, like grandparents, family members, stuff like that, and then hitting that other world. Did you, I mean, I didn't know you did the real estate stuff in the title company. Like, did you like that? Like, did you like dealing with the real estate side of the business or the business side of the business? Because you're with business people now.
I, yeah, I've always loved doing deals. I've always
Mm,
loved doing deals, but I'm not gonna lie. Like I wouldn't trade my current job for anything.
right.
I like what I do right now. Right.
Yeah. Yeah.
Every deal is a challenge.
Hmm.
I think what makes my business so attractive to me right now is no two deals are alike. Like
Mm,
businesses are like people. No two businesses are alike. So trying
right.
to find capital for those businesses, it's literally like trying to fit a different size cylinder into a different size hole every single day. So it's always
Yeah.
problem solving.
Right, right. So is that so when you're looking for capital, I mean, for us in real estate, and you'll know this too, is there like from a debt side, if you go into a bigger capital, do you looking for like a warehouse line and you have a certain criteria and they check all those boxes and you go to that group and then they fund the capital like a broker? Is that kind of like the way you guys do
Yeah,
it, or you direct lender?
Victor, the way we do it is a little bit unorthodox in our
Mm,
industry. Okay,
okay.
we don't even talk about financing. Like we teach our advisors, don't even talk about financing. Get to know the business. Get to
Right.
understand the business, the cash flows, the balance sheet, what the
Mm,
debt service is. Just get to understand the operator.
right,
And
right.
then once you know the business, then
Hmm.
it's looking for that lid for that pot. Like every business has different needs. Like for example, I'm gonna just run a few scenarios through you, right? Like if you've got a business that is very top heavy with equipment and vehicles, maybe equipment loans are the best way to go.
Hmm.
If you've got a manufacturer that has very large receivables, maybe a factor is the right way
Right.
to go. Right? If you've got a general contractor that is bidding on huge jobs, project financing is the way to go.
Right,
So
right.
a line of credit or a term loan doesn't solve all the problems. You have to
Mm,
find the right product that fits the cash flow needs and also the credit criteria of that principal and entrepreneur.
really? Okay. That's interesting. You know what's crazy? You said something that really like it resonated with earlier. You were like, I don't think businesses should have startup capital to go, right? It's like I know this sounds crazy, but I continue to grow and expand. I really do because I've never had startup capital. And I was listening to somebody who has a I studied the top of the food chain. I do, right? It's for what I'm doing now to build an actual company. And I was listening to someone that I know, and they were doing an interview, and he was like, "We had startup capital when we got started. We got 10 million. We took 10 employees, and that started us off." And that was interesting to me because I've heard startup capital so many times. I was listening to somebody else who had a fund. They're like, "Yeah, we started off. We had 200,000 and two employees, and then that's how we started. Then we started raising capital for our fund. Then we started the products and things like that." Because I was always wondering, like, dude, like, how are some of these companies getting started? Like, they have an office, they got equipment, they got staff, they're paying payroll way before they either have a product or they've raised capital for their real estate fund or a syndication or anything like that. I've never done that. And then it dawned on me, I was like, oh, those are two separate actions. The startup capital was to start up the company, and then the capital raise or the fundraise or whatever was for the actual deal, right? And probably the same thing for the business. And I don't know if that's the same thing. And with a business, naturally, you come up with a concept, but you have a product and you sell it on margin. So there's your capital. But that was interesting to me because I've never had that. I've never went to the bank to get a loan, credit card stuff. I've always hustled up the money, took the money that I made and then did that. And naturally real estate's a little different because you can tie up an asset or you can get partners, you do a deal, but that's really not a business and that's not startup capital, that's acquisition cost, right? So it's interesting because the more I talk to, which is why I'm grateful to have this conversation. The more I talk to business people and the more I talk to people on the debt side or the financing side or even taxes, I'm starting to realize the huge separator that most people miss if you're not further along in your business or you're starting another leg in your business that's funded. So thanks for saying that, man. And that's an interesting thing to me because I was like, oh, it always felt like I was on chapter four. And then I'll ask a question to somebody. And then they're like, yeah, don't you know this? And in my mind, I'm like, no, I was genuinely asking, but I skipped chapter one through three, if that makes sense, when I was talking to some people that
Mm,
were further along.
sure. And Victor, look, I don't think there's one way to skin a cat. I think there's
Of
multiple
course.
ways to skin multiple types of cats, right? So there's
Hmm.
plenty of firms out there that have grown with debt. There's also
Mm.
successful firms that have grown giving up some equity, right? And
Yeah.
and everything and every combination in between, right? It's just a matter of what works well um, for that sort of business, right? I
Hmm.
just bring my life experience is to my skill set, right? And those life experiences are it's disingenuine for me to ask others for money before I've even earned a penny yet, right?
Mm.
So these pre-revenue companies, as much as I can see the business plan and understand what the aspiration is, um, it's a tough conversation for me.
Yeah.
That's why we like being on the debt side and not on the equity side. And
Yeah.
frankly, a lot of our deal flow is from firms that are trying to extinguish those equity positions with debt because now they're growing. They're realizing, well, maybe I'd like that 20% back.
Yeah. Yeah. That makes total sense. It really does. So, and you and I have talked a lot about the taxes, cost segregation, and things like that. Like, how does that spill in, especially on we'll talk about strategy. Like, how does that spill in? Because one of the things that we're getting ready to start doing, and this is for me, right? Is start our own owners club. It's kind of a mastermind coaching consulting thing where I start to kind of connect with a lot of business owners and it's a paid group. But a lot of it is talking to them about, look, using some of your active business income to additional, right? Like scaling up revenue and then passively investing. So you're using your revenue from or company revenue to facilitate investment someplace else. Because I find a lot of guys, they have it,
Yeah.
but they don't have time for two businesses. But that's a tax strategy. So how does it like when you're thinking through that, do you like that idea for somebody to say, look, I have a lot of revenue, I have a cash business, and if I invest as a limited partner in a multifamily asset that's stable long term, could you plan that out at the beginning of the year knowing that that's going to happen? Like how is that typically structured like when for a business owner that you may deal with or whatever?
I love those tactics, and thank you for the question. So, Victor, let's get the ground rules out.
Yeah.
As capitalists, we want to make money. Okay,
Yeah.
we want to make a lot of money. We're capitalists, right?
Right.
But we also have to manage our costs as we make money. But
Mm,
the more money we make, the higher our tax liabilities are. Okay,
right.
and what entrepreneurs and business owners don't like is the unpredictability factor. Okay,
Right.
how much money we're going to make this year. So what the IRS code does is give us plenty of tools of offsets and deductions and accelerated depreciation to offset that income. And you mentioned a cost segregation. A lot of business owners, at least one of our mandates to our clients is always buy the real estate where your business is located,
Mm,
just as a rainy day fund, right?
yeah.
And it's always better to build capital than to throw rent money away. If it's
Right.
possible, acquire that real estate. A
Right.
lot of entrepreneurs and baby boomers have a ton of equity tied into their business, and it's easier to liquidate real estate than it is to liquidate a business. As you know,
Absolutely.
real estate for the most part, if you're in a metropolitan area
Right.
or a high populated area, real estate is liquid in
Yeah.
America.
Yeah. Absolutely. I
Okay.
tell people
With
that all the time.
okay. Yeah. Whereas a business is illiquid, right? Because you
Hmm.
have to find someone that not only is familiar with that industry, wants to take on that, has that entrepreneurial zest.
Right.
So it takes a lot longer to sell a business than it does real estate. But
Right.
going back to the tax liabilities, right? Why would we not take advantage of any creativity the tax code affords us to minimize that tax liability? Now, couple that with the earlier conversation on how do we scale the business?
Hmm.
Well, ultimately, there's only so much you can bootstrap. There's only so much a business burns off on a given year. Certain
Right.
industries may have more profitability than others. Some ROIs may be better than others, but there's a limit to how much money you can make every year. So you
Right.
need working capital. So how can we become attractive to a lender? Well, we become attractive by showing high profitability.
Hmm.
Well, there goes that there goes that small blanket, right? We cover our shoulders, but we expose our feet,
Right.
right?
Right.
So if we're showing high profitability, well, we also have high tax bill.
Yeah.
So enter stage left, the Batman utility belt. Every entrepreneur needs a Batman utility belt, right?
Yeah.
If there was a spider, he had the anti-spider repellent. If he had
Yeah.
a tax liability, he had a cost segregation, right? So
Yeah.
you want to be the Batman entrepreneur where you have some tool in your utility belt,
Mm,
whether it's a set plan, whether it's a cost segregation,
mm,
whether it's a 179, plenty of tools out there. And just I think one of the best partnerships an entrepreneur can have is a trusted CPA or
right.
CFO to have these ongoing conversations.
Right.
And you don't want to have these conversations on December 31st. You want to have these conversations all year
All
long.
year.
Like
Yeah.
you want to, because you want to structure your, not only your corporate structure, but also your deals with the
Mhm.
anticipation of how am I going to offset that tax liability? Because the
Right.
last thing you
Right.
want to do is say, okay, I have to get prepared for that 30% tax hit,
Hmm.
right?
Right.
You want to be proactive
Prepared.
in
Right.
addressing that rather than reactive.
Yeah. Yeah. And that's what we're trying to do too, is like structure everything we're doing with our raises and close with our raises and acquisitions like every quarter. So we're like, hey, look, if you're going to make a plan with us, here's the plan. Here's what our targets are, and if you can structure that with your accountant, CPA, or whoever you have that's your tax strategist, then you already know where that capital could be deployed. It's something that's there. The tax structure is already there. So, like you said, you're not waiting till December 31st to try to come up with some plan and dump a bunch of money into marketing. So,
Victor, on your real estate funds, do
mhm.
you share the depreciation with your limited partners?
Yeah, they get a K1 based on the percentage that they invest.
Wow, that's sexy.
Yeah, yeah.
Very
So
nice.
And, it's just simple. It's something I've always done. So I didn't create the structure of the way our fund is different from the way that my partnerships were when I was just a partner and we didn't have a fund because it's just an easier conversation to know that I'm going to do the same thing and it's easier to explain, right? And the bigger
Super.
part is, like you said, because I had a partner in the past that all he wanted was the write-offs because he made a bunch of money. He didn't care about cash flow at all. He's like, I have enough money. I just want as much write-offs as I can to offset my income. And that
Sure.
was a question too, because a lot of business owners, if they're not, because I know there's a way for you to kind of position yourself as a real estate expert so you kind of get the other benefits so you can write off more, not just the cash flow that you received. And I think it's what, 720 hours a year, it's like 15 hours a week of blah, blah, blah to check the box. But there's some other things I know people have to say that they did, or it has to be, it's not proven, but it needs to be proven and or documented. Like, what is that? Have you seen that for some of the people who are like, yeah, I'm trying to offset other.
Victor, if someone is involved in real estate to the
Yeah.
level you're involved in, or one of your limited partners is,
Hmm.
man, it's easy to get qualified as a real estate um,
Professional.
investor. I mean, it is you're active.
Yeah.
I mean, you're active either managing properties or managing investments, or it's
Hmm. It's
it's
there.
not for the weak of heart.
Yeah, no, no, for sure. And that's, I tell people too all the time, it's like it's kind of a part of what I say. I'm like, you don't need two businesses because this is a business. So, you know,
Yeah,
the, and it's one of those deals where it's crazy and you get that experience too. So that's good. So and thanks for that, man, because that's important. Because especially that they bought the bonus depreciation back. Just recently I was talking to a dentist about that, and we were talking about the offsetting of R&D all over again, and he's excited. My office, I'm not at the office today, but my office is at a private jet community, which is the
okay.
Atlantic, right? So, all that stuff's back. One of my buddies just bought a jet, you know what I mean? So like everyone's like, okay, cool, this is all back. So now we're getting back to the phase where we can utilize some of these things that we were all afraid to go away. What do you think is
You
coming like?
know, Matt.
Go ahead.
Matt and I, we a few weeks ago we recorded our year in review podcast. We were talking about the podcast, and
Mhm.
our executive producer Jenny, she loves to throw ad lib questions out there. She doesn't want to prepare us. She
Yeah.
likes us thinking on our toes. And at the end, she threw a question. She goes, "What's your word looking back on 2025?"
Mm.
And it took me a few seconds to think about it, but I I, I took 2025 as the year of optimism.
Mm.
Finally, after a long while, there was a bit more optimism in the small business space and the entrepreneurial space.
Yeah.
Now, I know it takes a while for the market to react to certain legislation and certain bureaucracy, right?
Right.
Inflation took a while to dissipate, rates are taking a while to go down, but there's a sense of optimism out there
Hmm.
that the antitrust division doesn't want to break up every single deal,
Yeah.
right? The attorney
Yeah.
general is not looking to sue every single company that's looking to grow. There's
Right.
just a little bit more of a business friendly mindset out there. And something beautiful happens once you have a business friendly environment. It's
Yeah.
trickle down.
I agree.
People people buy stuff, people hire. It's a boomerang effect.
Yeah. Yeah. So, and it's interesting because I just was having this conversation with somebody. I was like, I always watch the big movers, right? Like in the economy. So right now, naturally, for real estate, it's like data centers, for currency and stuff, it's Bitcoin, like for money, right?
Sure.
I still think one of the biggest things that's probably still not being taken advantage of the right way is probably crowdfunding. The way people have been able to raise capital, connections online, that's going to continue to advance. I think it's early phase, especially in the real estate space, businesses as well.
That's a good point.
But
Yeah, that's a very good point.
yeah. So as you're thinking through that, like what's some of the big changes well, and it may not be changes, but what are some of the things that you can look and say, okay, I'm watching this happen because you're on the front lines, you're talking to business owners who are in the trenches, right? What's happening throughout 26 that you think is going to trickle in? I have this thing. If you don't do something now, you won't have it 2 years from now. For me, it's
Hmm.
acquisition of more Class A trophy properties. This is the time to do it if
Okay.
you're going to do it. just from a debt perspective, like debt's high, cap rates, you're at kind of almost at a negative or even debt, the debt side, the debt yield and stuff like that. But for businesses, what do you think is going to happen for businesses over the next probably 2, 3 years? That if they do it over the next 3 years, based on what you know, structuring, strategy, the financing and stuff, that if they don't get it done now, they're gonna that window may shut on them, and it could be a little harder to do maybe 5 years in or after we lose President Trump, and people start to unravel a few things.
Okay. So I guess let's talk about a little bit of finance and a little bit of like practical industry expertise.
Yeah.
You can't have technology fix a leaky sink, and you can't
Mm,
get technology or a robot to fix a roof, at least yet.
facts.
It may be in 10 years, right?
Right.
So I think this the trend of the trades will continue.
Mm,
Okay.
definitely.
I don't define the trades as the handyman, right?
Right.
That's just you and I being lazy. We
Yeah.
don't need handyman. I mean the professional licensed electrician,
Yeah.
plumber,
Plumbers,
HVAC, general
HVAC.
contractor. And
Hmm.
if housing does turn the corner, man, everything I just said, 3x it.
Right.
And
Are
when I
those
say
the
turn the
highest?
corner,
Are those the highest ones? Like if there's a market cap on one of those deals for somebody trying to exit or buy another one? Are those services pretty much some of the highest that you see when they do sell?
no, no. Unfortunately, you always see a bigger multiple on anything that is AI or tech or
Mm,
techie, right?
right,
So
right.
those multiples are always going to be a little bit modified. Now, you take a trade firm or trade related firm, and some way somehow you make it a little bit more techie, where maybe there's a marketing funnel, or maybe there's a training methodology, because the trade schools probably leave much to be desired.
Right.
Um, that could probably get yourself a higher multiple.
Mm,
So we're keen on the trades. We see that moving on. You also continue this baby transition to the sunset, right? There's a lot of baby boomers out there, like our parents, right? They're still
right,
selling their businesses, they're still retiring, and they haven't all transitioned to our generation yet, or the younger generation. Like those businesses need to be sold, right?
right.
So if you're looking to expand, don't expand with a startup. Expand by acquiring an existing
Mm,
enterprise. I mean, if that business has been around for 25, 30 years, they've probably figured something out.
yeah, it's seasoned enough.
Yeah.
Okay.
And on the tech side, what we see right now is there's going to be some reckoning with brick and mortar banks and stable coins. You
Mm,
can't ignore the stable coin methodology when it comes to everyday banking.
right.
So whether big banks are going to be linked to stable coins, or they'll be able to easily convert to stable coins, I think that's going to be next wave of fintech evolution.
Mm, okay. So in my space, like we're raising, we have a fund and we're going to continue to raise fund after fund as we continue to go and make more acquisitions, right? As the debt changes. What do you like about what I'm doing and what do you not like about that side of the world? Like for somebody like me.
Meaning your fundraising
Yeah, yeah,
development
yeah.
side is,
Being equity fund, investing in more stabilized, best in class assets. Naturally, I'm in San Diego as a county, and I'm going to spill over into other ones. Like, what do you like about that model? And I'm sure it's pretty cut and dry because I'm not doing anything crazy. But
yeah. Well,
there's the ups and downs.
what I love about your model
Mhm,
is, and maybe I was so deep in the weeds that I get to appreciate it even more. The business of real estate is very difficult.
mhm.
So if I can have a pro like Mr. Bell managing my real estate holdings, and I can just observe from afar and take a look at a quarterly report, or maybe
Mhm.
a monthly update,
Yeah,
or a Loom video that kind of gives me, you know, an insight as to what's
updates. Yeah.
going on. Yeah.
Hmm.
And I know I've got that consistent cash flow, whether it's a quarterly return, an annual return, a
Monthly.
biannual return, whatever,
Yeah.
whatever it may be. if I get the privilege of investing with real estate without the headache,
Mm.
man, that's like having a beautiful wife without the complaints. I mean, it doesn't get it doesn't get
Yeah.
better than that, right? Um, on the negative side,
Yeah.
it's not easy to find a partner like Victor Bell. There's a lot of schlock players out there
Mm.
that put out a lot of bad advice and materials out there. So if I think your investors realize how lucky they are to have you. But if you're looking to enter real estate, there's a huge leap of faith there because you don't know
Yeah.
how to enter, and you probably don't have the millions of dollars to enter with a trophy property, right? So you
Right.
want to start with 100,000 or 200,000, whatever it may be.
Right. Right. And
So I,
that's
I only see I only see positives with your side of the business.
Yeah, well, I appreciate that. And I tell people like I always tell people the worst part about real estate, one, it's heavy. It's not Bitcoin, it's not crypto. You can't press a button and make it go away. It's a liquid, which I personally think is a plus because if you have an emergency, you kind of got to take a step back. You can't tap into things. You have to figure it out, or if you have a business, you got to be like, or if somebody wants to borrow money from you, you got to be like, I don't have any money. So, to your part, like it's not volatile. Also, because a lot of people who invest, they want those big bangs. 1 month it's up, 1 month it's down. They can trade in and out.
Yeah,
You don't get that with real estate. It's pretty steady, Eddie. Um, and now, and I was just talking to someone about this as well. It's like, with the shift in the market, any type of market changes, you probably see it in the business side, tax side, especially on capital, that when there's a discrepancy in real estate, it usually comes from the debt. And when there's a problem with the debt, that means I know it's going to sound simple, but I'm a simple guy. When there's a problem now, that meant there wasn't a problem before. So everyone really put all their attention on buying apartment buildings or shopping centers or whatever, and they were fixing them and they refinanced them. So there is no problem. So to go back into the world, like you said, and you have these, certain people who go back into real estate and say, well, I'm going to buy something and I'm going to revitalize it. I'm going to do a value add, which is fixing it up. Those days are gone. So unfortunately, the strategy has to grow. So it's like you have to start looking at nicer assets, pick the next class up because 10 years from now, the meat's gone. You have to kind of play the game of
sure.
buy and hold until that world comes back again because the money was cheap. It already got done. So I was just one of my investors lost a bunch of money in a deal that they did, and he was asking me about it prior to, and I was like, that's a tough one. Like, I don't know if you're going to be able to get out a lot of promises on your returns. You can do it if you don't want to wait, but I mean, I would say just eliminate the risk. Now's not the time to risk anything. But he did it, didn't get his money back, or he got a very small percentage of it back, and he was like, man, that sucked. Um, like all things, it's an investment. It does suck, but it's like to your part, when you've been doing it for a long time, I've been doing it for 27 years, you can just see it. And it's unfortunate, but this is the same thing with businesses. You watch, like back in the day, like fidget spinners and all these little
Sure.
things, these trinkets, these trends that came out, and you watch them come and go, and you can
Victor,
kind of see it.
are you seeing any attractive trends in the real estate world? I know you mentioned a few earlier, but for years, storage was popular, and then, Class A rentals were popular, and hospitality. Like, what's the latest and greatest in the real estate world?
Well, from an institutional side and maybe family office side that can get involved is data centers. But again, it goes right
Okay,
back to if you can't play that game and you're a retail investor or you're a mid-sized investor where you can, again, be a limited partner. I'm not going to do data centers because in the end, as AI continues to evolve and things like that, you may miss the opportunity. Housing won't go away. So as a trend, I think I still go back to this. The data, naturally, you could figure you got management companies. Like just recently, I think RealPage got sued because they were saying it was price gouging because it was algorithm driven. So it's kind of like, if you go to any leasing office now, we deal with like Greystar as our consultant, and they're going to be property managers for us. But if you go to like some newer place, there's a screen. It shows the units that are available, and just like the stock market, those prices change and adjust per day, sometimes per hour. because it's running across the board and saying this one's vacant, this is the new pricing, and it could be, 2,700 bucks today, and you come back tomorrow and it could be 29. And that is something that is algo driven. I think it'll be rectified because it just like we said earlier, it was like the Department of Justice stepped in really fast and was like, hey, and they did a giant lawsuit, they lost. So now that's being broken apart. So I think the real trend will continue to be on the capital side. The ability to
Mhm.
raise capital and from who, and I think, and then also the way the evolution of technology has changed, and then from what? Because I know, like, I'm an investor in Cardone Capital, and they have their fund where they added Bitcoin to the real estate, which I think is brilliant. And because he's doing it at such a small scale, and I'm an investor as a limited partner, I get to see behind the scenes of, wow, that makes sense. So, to your part, I think that's more the trend. I think the other trend people talk about is like, what would be a disruptor, not a trend, is that Amazon or some other company can print homes, like 3D printing, which I think Lennar just came out with the first. I think it was Lennar or it might be Pulte Homes. It was one of the developers came out to do that, so it cut the time down to do the development. So
Yeah,
development,
yeah. Those 3D printed homes and like modular homes and like
yeah,
those cold containers. It's pretty amazing how they can put up a house in a couple of weeks. It's pretty
yeah.
wild.
The difference of that though is like people are like, yeah, it's going to cut the cost of the real estate, but really it's going to make prices skyrocket because if I owned 150 acres in the middle of nowhere and you wanted to do that and I knew that was your process, I'm gonna accelerate the cost of the dirt. You're going to have to eat that acquisition cost at some point, right? Or I'm going to partner
Mhm.
with the developer and I'm like, hey, I'll pledge my dirt. We'll go in as partners. You won't need acquisition on the dirt, but I want a piece of the profits on the backside and I want it done in phases and I want to be a part of phase one. So, like you, I'm a strategist, financial strategist, because I'm like, how do I make money for my
Hmm.
investors with minimal risk? Um, so that's the trend I
Maybe
think.
you need to set up a few apartment buildings in Greenland. You never know. It may become
Yeah,
the
who knows? We
51st
could start
state.
start getting there. At least get something on the water early. So even if they don't do it, I still got waterfront. Definitely. Well, I
Yeah.
appreciate this, man. So like, from your opinion in this, I always like to close it with this question, a couple things, because this is a straight talk about money. How important is money and capital as you, from a business owner perspective, real estate investor, or guys like myself who are in acquisitions? How important do you think money really is, as it relates to what you do?
Wow. To what we do, I mean, don't forget, our phones ring because clients seek working capital. Or I
Mm,
should say, clients are under the impression they need working capital. Okay.
right.
But oftentimes when we speak to clients, again, going back to our more methodical approach, as we start talking to clients and we start realizing that maybe they've got some holes in their bucket,
Hmm.
maybe it's best to fix the holes before you get working capital because otherwise it's going to seep right through.
Right.
Um, but our challenge on a daily basis is finding capital for the small business space. Small business in America has traditionally been a risky proposition. It
Right.
remains a risky proposition.
What's considered small
And
business? What's considered small business for like when you say that?
I would say, like our definition. I mean, I'm not going to use like governmental definitions, but our definition of small business is 500,000 to
Mhm.
25 million. I mean, if
Okay.
you're generating between 500 and 25 million, you're a small business in America.
Yeah. Gross revenue.
After that, yeah, after that, you're starting to enter mid market, right?
Okay.
Okay.
Yeah. Yeah.
Um, but it's not below 500,000 because then you're just self-employed. Okay,
Yeah.
so
Yeah.
so you
A
have to be
job.
able to replicate and scale um, what it is you're doing. Now, you know all the stats, and they're all out there, right?
Yeah.
Most
Yeah.
businesses fail within X years, blah blah blah,
Yeah.
and if the principal gets the flu or breaks his leg or is disabled, blah blah. So all these add to what makes small businesses a risky proposition, right?
Right.
Take that into account. Plus, you've got these macroeconomic trends like interest rates and pandemics and storms. So, obviously,
Mhm.
small business in America can be risky. And big banks realize that. That's why they're very careful when they fund small businesses and the rates are onerous. And that's why we exist, right? We thrive in that middle tier where we
Mm.
try to get creative in finding solutions for small business
Right.
because they're still
So
the backbone of this country.
of this country, yeah. So you feel like small businesses, like I always figure like from a business standpoint, like even for my own, like that's why I made the decision to not continue to be a small real estate guy. Do you believe from a business owner standpoint, from your advice, like the simple advice is don't be a small business because revenue and money and growth and scale is so vital to survival long term. Do you kind of feel like that's a message, a good message for people?
No, no,
Really?
I think you have to follow. Yeah, I think you have to follow your dream, right?
Mm,
There's always going to be the need for the corner bodega, and
true.
not
That's
every
true.
corner bodega owner is going to become a 7-Eleven, right? But for
Facts.
every 7-Eleven, there's going to be that 30-seat Michelin star restaurant, right?
Mm,
So the
mm,
beauty in America is variety, and
mm.
we use food and beverage as an example, but yeah, sometimes you want to go to the diner, sometimes you want to go to fine dining, and sometimes
Yeah.
you want Starbucks, right? And everything in between, right? So that's the beauty of America is variety.
Okay.
Um, but all those varieties at some point need working capital to scale.
True. Very true.
Yeah.
Very true. Okay. So what do you think it takes in your industry, like for you, like you and what you and Matt are doing, like to become a major player in your space? What does it take for from an education? I mean, from activity standpoint to people who are listening.
You need to be a generalist. Like you need to know enough about accounting to be dangerous. You need to know enough about systems and processes. You need to know a little bit about marketing. You need to know a little bit about underwriting. You need to know a little bit about every industry. Because if I'm speaking to a trucking company, I need to understand what makes a trucking company tick. But if I'm speaking to a manufacturer, I also need to know that. So we have to become general and then have to have access to those different sources of capital
Hmm.
so that we can match them with the right solutions.
Wow.
Right. So in our and the most important thing in our industry, and this is the most important thing, and I say this in every job interview when I'm interviewing someone, and I
Mm,
look to see if they have empathy. Because
mm,
you must have empathy for the small business owner. He or she is multiple hats, they're being pulled in multiple directions. If you don't have empathy, person, the deal goes sideways because that person's got a lot of pressure on his shoulders.
right.
And the last thing he's thinking about is sending you a list of 20 documents, right? He's got to make payroll. He's accounts payable. He's accounts receivable. He's unclogging the toilet. He's doing a million things. And you want me to send you 20 documents? Oh, I'll get it to you tonight.
Right, right,
And then
right.
he gets home. He's got another list of 20 documents from his wife.
Yeah, yeah, for sure. No, that's good. You know what? And that's important too, because like that's one of my wife has always said, you're insensitive. I was like, no, no, like I know I have a responsibility. But with that, like you said, I have empathy for people. And if you don't have that, man, you can't be in any business because business is a people, business itself deals with people, they're human beings, or even if you're just pecking away at a computer, there's someone on the other side of it that needs to handle it. So that's great advice for people. It really is. Be a generalist, have empathy. That'll put you in the major player seat. So I appreciate that. Well, man, I really appreciate you coming on and spending this time with me. Really, I learned a lot. Like it's great. Like this, selfishly, I tell everybody like I do this because I want to communicate with guys who are doing great things and I want to learn. And this allows me to kind of do that as well as share what I learn and people with you. So if somebody wants to get in contact with you and what you guys are doing or reach out, like how do they get in contact with you?
I'm always on LinkedIn. The company is Shield Advisory Group. You can schedule a call there. Our brokerage firm is Credit Bank with a C. And our podcast is the Liquid Lunch Project. And if you are an entrepreneur, I highly recommend it. We always ask here internally, whenever we have a guest on, we always say, what will an entrepreneur learn from
Mm.
listening to that guest? And if it's a positive answer, then we say, welcome aboard. Let's come on the podcast, right? So we
Right.
always say the same thing. As long as that person can impart some valuable nuggets to the small business owner in America. So I think we cover a lot of subjects and cover a lot of ground that are helpful to small business owners. It's the Liquid Lunch Project, and you can find it on all the podcast verticals.
Perfect, perfect. And I'll add the link to it here too whenever we have this out. And but again, thanks so much, man. I really appreciate you, Lou, man. You've been a great friend, great
Thanks to
advisor
you,
to me.
thanks to you, Mr. Bell. You're doing wonderful things in the real estate space, and you're you're bringing a lot of knowledge to everyone. Thank you so much for everything you do.
For sure, man. I'm definitely gonna send some people your way when I have the right ones for you for sure. Cool, man. Well, hey, have a great day today. I appreciate you.